So, new GDP estimate was reported today, and it actually came out better than expected. But technically, we are still in a recession. So, what's going on, team? It's Ricky with Learn, Plan, Profit, and TechBud Solutions. Hope that you guys are all having an amazing Thursday. One of the things that was reported today that we made sure we made you aware of based off of our second upload yesterday on our YouTube channel is the GDP second estimate. And the first one came out better than expected. We expected to see a decline of negative 0.9%, but we actually only saw a decline of negative 0.6%. The GDP deflator came in worse than expected. We were expecting 8.7%, but we actually reported 8.9%. Now, that's not even the main reason that I wanted to upload this video, and this video is actually going to be very short and sweet. It's the understanding of what the Federal Reserve said shortly after, and it's the idea that they intend to push for higher rates and that they still intend for this up and coming FOMC Fed meeting that is going to be happening in the month of September. For those that are unaware, there's no interest rate hike that we've experienced in the month of August. They passed this one, right? They skipped it. But in the month of September, based off of these Fed officials, they are still pushing for to front load interest rate hikes. As of right now, it seems more possible for a 0.75% or a 3/4 of a percentage point of a hike. Right now, or at least based off of our previous CPI data report, the expectation was set on 0.5%, so half of a percentage point. But now, because of the data and how the market is reacting, things are not necessarily getting worse, but they want to make sure that they front load these interest rate hikes and making sure that they aggressively get better and then they can ease out of it, right? They're trying to formulate that soft landing, but they need to make sure that they front load those interest rate hikes. And this should be a concern for the overall market. If you guys look at QQQ, for those that are unaware, this is a NASDAQ ETF. When this one goes up, or when the NASDAQ market goes up, this thing goes up as well. I don't know if you've noticed, but for the past 3 days, look at the 1 hour time frame. For the past 3 days, we've been trading sideways. Today was the first day where we gapped up a little bit. But now we're beginning to retrace and retest that support level. I am all for buying the dip, especially for our long-term investors and those that are trying to not try to make money now, but invest now to make money in the future. The only reason I would be cautious right now is if we do break below and if things are worse than expected, who's to say that this is the bottom, right? If we look at the 4 hour time frame, we have been trading sideways. We have been showing signs of a support level. We still are not making higher highs above the EMA, so please make sure that you're aware of that. We do not have confirmation of a reversal, but we're very, very close. Just make sure that you don't get too excited too early on, because if this thing retraces and then breaks below that support level, we're probably going to work our way back to the moving average. And if we break below that, then we can work our way back to previous lows. Things can always get worse, right? And I just want to make sure that you're always prepared for worst case scenario. It's never that you should be afraid to take advantage of an opportunity, but simply understand that things can get worse before they get better, especially before there's any confirmation of a reversal. There is no confirmation right now that the market is actually beginning to recover. So why get ahead of yourself? All this means is that you need to stay up to date. You need to be aware of where the market is heading, especially during these choppy days. It seems like these days just feel like they're, lasting longer. And it's because there's not much direction as of right now. Set your alerts, build those effective watch lists on stocks that you intend to invest in, and allow the opportunity to present itself. That simple. You don't have to overcomplicate it with stocks that I'm trading, that your neighbor's trading, that your best friend's trading. I want you to focus on what stocks, 1, 2, maybe 3 different stocks that you see the most value in, that you wouldn't mind investing in for months or years from now. That's the goal. Because if things do get worse, then guess what? You prepared for it. So you should be excited. You should embrace it. You should welcome it. I think that's what's most exciting, that things can get worse And that just means that we can get a better deal on the companies that we are intending to invest in, because we all know that the markets eventually will end up recovering. So very excited to follow up. Just wanted to provide you guys with a quick little recap on that GDP second estimate that was released today, and making sure that you guys are aware of what's to be reported tomorrow. So I do want to let you guys know that today we are hosting a pizza party at the TechBuds HQ. We're located in Chandler, Arizona. You guys can head on over to techbudsolutions.com and click on TechBuds HQ for our address in Chandler, Arizona. It's going to be from 12 to 3. So I'm actually going to just shower and then head on over to the HQ, get the pizza, get the drinks ready, and I hope to see some of you guys there. We're open to the public today. So if you're in the Arizona area, just feel free to stop on by, meet the team, meet other local traders and investors and entrepreneurs. And we'd love just to be there and be able to assist you any way that you see just. So really do appreciate your time. Hope that we earned your thumbs up. Please consider subscribing. If you have any questions about what we talked about today, just shoot me a direct message via Discord, and that's that first link down below. Like always, let's make sure that we end the year on a green note. Take it easy, team.